All right, let's go ahead and get started. Hey, welcome if you're joining us today to participate in the webinar. I'm Brian, founder of A Plus Setups, if you do not know me, and I've been trading for 40 plus years. What I'm going to talk about today in the webinar, and let me start out for those that may be reviewing this recording here. It is Wednesday, January 21st, 2026. We're going to talk about a technique, a method that I use every day and have for at least the past 13 years. And we're calling it the CenterLine Method. It's really higher highs, lower highs, punctuated and isolated by the GHL color bars. It's a really simple concept and it works. What I've done is I trade options. I have multiple programs that I trade, and one of those programs is an option program where I trade on the daily, 4 hour, 1 hour time frames, and I use this concept. This is one of my daily visual scans that I use across my stock watch list. I don't automate scan list because I get enough signals simply from the 20 or 30 stocks I watch to keep me busy. Plus, I trade a lot of S&P and NASDAQ futures, options, pairs trades. So this method here is a very, very clean method and very visual for to exploit one of the key repeatable patterns, and that is trend pullback. And I refer to this as probably one of the more visual trend pullback methods. It is for me anyway, just simply because I understand it. I've internalized it. I've used it forever. I've used it every day just because it works. And what I want to do is I've conducted webinars showing how I do this with stocks, but now we're going to just talk about intraday timeframes because this works really well in the intraday time frame. Now, I want to caveat by saying that you have to have your trading plan. It has to be finely tuned to your style, what your objectives are. For me, sitting in front of the screen trading all day long, one method is not what I do. I tend to go in. I might trade 15 or 20 times for the day, but I'm trading across different programs in a lot of different accounts. So if you're a scalper intraday, we have a couple of solutions for the scalping problem. And one is what we know as in the room as the jiggle and the reverse mullet. Those are high probability setups that have inverse risk to reward parameters. The centerline technique, however, is a scalping method where the risk to reward is 1-to-1 or better. And I'm going to show you. I'm going to walk through today's examples and just show you some of the trades. So these aren't cherry picked. These are trades that are playing out today. And I didn't cherry pick markets. I mean, I'm watching Apple and Nvidia all the time, crude, gold, ES, and MNQs. And then, if anybody has a chart that you want me to put up on the screen, just take a look at. I'll be glad to, as long as I can pull the data up there. But let's go ahead. Let's back up here. And the reason I have Nvidia up is because I tried to get a trade on here and it blew right through me. I tried to get the trade on there for the short side in Nvidia while I was prepping for the webinar, and it blew right through me. So I had two chances where I was using the center line to try to get short Nvidia and missed both of those great opportunities. So, but let's go ahead and talk about the center line technique. Okay, so what is the center line technique? Well, it's an indicator that we've built in the room. We've taken a tried and true concept, the GHL color bars, and what I did was I created a derivative of linear regression, and we applied this to all of our scalping models. And this works on weekly, daily, 4 hour, 1 hour charts too. This works on every time frame. I'm going to show you here. We've got it on ticks. I'm going to rotate to minute bars and just show you how this thing works. But what this indicator is comprised of is the GHL color bars. We have the CenterLine indicator for the current chart. Right now, I've got the NVIDIA set on a 333 tick chart. That's what this CenterLine is tracking. And then our indicator has a feature where you can select it and you can plot the higher time frame CenterLine. And this is what creates the dual concept or dual time frame method. And you can see it's very clear. So your action areas, I'm going to start with NVIDIA here, and then I'm going to back up real quick. You can see here, this was the bull move up and the bear move down. I mean, you can't ask for a better trend method when the market's trending to keep you on the right side. So I'm going to talk about where the first point is and then where you can re-enter if you missed the first. And I'll show you over here where I tried. I'll blow this up and show you where I tried to enter on NVIDIA. All right, so what you're looking for is you're looking for the center line for the current chart to cross over your higher time frame. Now, the higher time frame is going to be subjective, and it's subjective for you. I stay on tick charts somewhere around 2 times the time frame, approximately 2 times the time frame of your current chart here. So this let me open this up here. So you can see on I have the higher time frame. I have it set for 999 ticks. That's what this chart is set for. Now, you may run that differently on every market. If you're watching markets, it may be a little different on tick charts. You may do a 333 and go to a 600. You may like on slower moving markets, you may like a 60 tick time frame, and then you run 180 tick higher time frame. It's up to you. It's the concept is what I'm trying to get across here. There's no right or wrong. You just want a good picture for the market you're trading. All right, so you get the cross, bull move is on, higher time frame green, stays green through the whole way up. The GHL color bars pull back, they'll turn red. While all of this is green, you get the up close blue, you're in on this cluster right here. It's not precise. You're just in on the cluster. And you know, for me, my stop is way below this swing low. I give it plenty of room. So when I say that this is a method here where you should be able to get your 1-to-1 or more, if you're trading multiples, you know, you want to try to let this thing run. So, you know, if you're getting the first lot out at 1-to-1, I mean, I just always eyeball 1-to-1. So, you know, it's up somewhere up in here on your entry. So you're out on your 1-to-1 right there. And then hopefully you've got a runner in that doesn't come out until, you know, you breach maybe whatever your rule is. Maybe you breach on the cross or whatever. But it's just as simple as that. It's a color-coded trading method, and you don't need any other wazoo things to get you in. I traded this forever with just simply the color bars, no lines or anything. I just use, hey, first high or low. If I'm bullish, I'm going to get into this cluster right here. And for me, options trading, you know, I don't really trade on stops, but my stop, if I were, would be way below this right here. Consider this a 4-hour chart. I would never trade options on a short time frame like this. we're doing straight up stock or micro futures. So anyway, that's your entry point. That should be evident after I've explained this. But if you miss that and you come back and you're like, oh man, I missed that. I still want to get in. Here's your next pullback into the red, and you get the blue up. So you're in on that second bar right there. A stop way below this. You're here. So now your 1-to-1's up in there somewhere. Again, eyeballing. You don't have to be precise with this. You can be if that's what you want to do. That's up to you. Then hopefully you got some runners on. Now let's blow it up and take a closer look so you can see what I'm talking about here. Crossover. Red pullback in an uptrend. Closes, you let it close, and then you're in on the second or third candle here. Stop, somewhere back here. 1-to-1, somewhere up there. If you miss that second pullback, it's best to wait for this bar to close. These bars are going to change colors once they get above their activator. But it becomes final once the close occurs, and then the color will lock in. You're in on here, get a little bit of a pullback. Again, your stop is down here and right there. So your 1-to-1 is up in this area. And then you just write it up. Let's go over here to the bearish side. We get the cross, you get the first pullback, bars turn blue or green or whatever color you designate them. You get the move down, you try to get in here. I missed all this and I tried to get in over on this side. That was where I was doing some work and I'm like, man, I missed that. I saw the NASDAQ going down. I rolled the NVIDIA and I tried to sell the ask right in here and it just went away. We caught another one and as it came down here, I started trying to sell the ask and it just vaped right through me. It never even came back up to put me in. So yeah, I could have just sold the market on that for sure and gotten in, but I did not. Two opportunities to get in to ride the trend down in NVIDIA on the short side, and I couldn't execute. Couldn't close the deal. All right, but this is as complicated as it is. It doesn't get any more. There aren't 3 pages of variations to this. It's entry, stop. It either works or it doesn't. And when it doesn't work, you just pack up and try to get an entry again on another potential 1-to-1. How accurate is this? I don't have stats on it. I am going to build statistics for this model in the last half of the year. But I would venture to say you're probably going to win 45% of the time. Yeah, I think that's probably what you're going to end up winning on this. You're like, well, I want to win 88% of the time and get 1-to-1. Yeah, okay. If you find something like that, let me know. It doesn't exist, though. You can do really well on these systems here where if you win 45% of the time and you got runners that can capture moves like this, you take a portion off at 1-to-1 and you keep on. I mean, what is that right there on that risk? I mean, are you kidding me? That's like 9 or 10-to-1 right there on your risk. That on a runner pays for a lot of mistakes, and you would still be in it. Pays for a lot of mistakes. So yeah, don't frown on something that only wins 40% of the time. It's you trade small and stuff like this and just eke it out. All right, let's go back and just look at some other markets. All right, let's look at the S&P. I mean, this is the current market here. Here was first entry right there. We had the crossover. Second candle, you had a stop. Maybe you got stopped out right there. It's possible, depending on how you trade. I have extremely wide stops on my intraday accounts. I don't trade these. Let me make sure you understand. I don't trade these in prop firms. I trade all this in personal accounts. I give myself plenty of room. I'm not over leveraged. I'm way under leveraged on these, so I can take small positions, really wide stops, and let them play out. But maybe if you're trading it tight, you would have probably got stopped out on that. I never would ever, with a gun to my head, would I put a stop 2 to 4 ticks above that swing high. You're just begging. You're begging for the algorithms to come up there and sweep that out. I mean, you might as well just go ahead and give them the money if you're going to do that. You trade small enough to where you can put big old stop losses in this. That's the way I trade anyway. So, um, and then hopefully it doesn't come up there and challenge. This was an obvious move, hindsight, obvious move to try to get people long again, traders long again, and then look what they've done. They just absolutely rolled over. But if you missed all this, you got stopped out, another entry right here. Next pullback into the bearish, we're below everything. You get the down move, the red, you're in on this cluster here. And it takes a few minutes to work out, but then there she goes. If you want to take another trade, try it again right in there. This was a little more dangerous. This was POC from yesterday. So, potential bounce off of that right there, like it did here. But it cut through it like hot butter and then went back up, checked it again. Another entry off of the yesterday's POC. This was beautiful here. If you missed all of this and came in, and if you plot volume profile, I mean, it's still bearish as all get out. And you check that twice to the tick, collapse, your entry's right here, and you get a really nice move down. And it's still going. Still going. All right. That's MNQs. ES. Now the ES was a little more forgiving. You didn't get the cross till right in here. You didn't get that first pullback to there. Clean entry here on that bar. And man, you got paid immediately. You look back over here for the bullish side. Cross, pull back. You get in somewhere you're in this cluster. And you got to stop. My stop would be way back here, but I understand a lot of traders are going to be probably in this area right here. Most are going to be right there underneath that swing low. Other traders are going to be here. I'm way below all this. So, but you get paid immediately on this. And honestly, even if you were a couple ticks under this or down here, your runner should have never been challenged at all. Just a beautiful run up. Okay, if you missed anything, missed everything, here was another great entry. Still bullish, red pullback, green candle, in on this little cluster, checks it, and off she goes. All right, hopefully you can see this isn't made up stuff. I'm not cherry picking things. Let's take a look at gold. This current gold. Beautiful right here. The most recent sequence, bearish, bullish pullback, red down. You're in on the second candle and you get paid. I mean, you're 1-to-1 right there on that move. And depending on what you do with your runners, you could have been out on a break even, or maybe you're still in it. Don't know what your trade plan is. But if you miss it, another entry is right here. And then if you miss that, another one right there. Red, you're in on this bar. Stop up here. 1-to-1's down in this little cluster right there. So gold all over the place on those big moves, but the center line keeps everything framed in context. Let's take a look at crude. All right, if we had a green up close right here, well, we changed Yeah, so now we're in a bearish profile. I thought that was a current market. I was like, hey, if we get a green up close right here, I'm going to take that trade into personal accounts. But not. So we might get a trade in on crude on the short side here. I'm going to be watching that. Crude all over the place, not good structure. Here was an opportunity to take a short, but you would have lost on that one. It was a valid setup. You're going short on the upper side right into the VWAP, though. Just keep that in mind. I mean, that's where she turned at, right at the VWAP. Here was a better one away from the VWAP. You're in this little cluster, stops up here, 1-to-1, right in this cluster right there. So again, nothing for your runner, but you get 1-to-1. Here's a really good setup here, first trade, and I'm just looking at first pullbacks. And if you get a second, an option to take a second one, I mean that's up to you in your trade plan. But you can see the mechanics of this. Pullback turns green, you're up on this 1-to-1, somewhere up in here, and no issue. And then your runner comes into play on this. Apple. I also tried to short Apple in this cluster right here. I had a really bad because the market was moving so quick, and I was working, getting ready for the webinar. I've got a bag full of excuses right now. That's what I guess that's what I'm saying. And I tried to sell Apple to ask right there, and I missed that one too. So how am I doing this? I'm using Ninja Trader platform and executing trades on Thinkorswim. So I just use I have this set up on the ladder, and I just come in here and just execute the trades on the Thinkorswim ladder. But a textbook pullback and rejection. And Apple still is, I mean, it's still potentially going down. If I get a down move on this right here, then I'll look at taking another short. Because I mean, look, we're in take back mode right now. That's what the market's doing. It ran up and it's taking it all back. Look at yesterday in Apple. I mean, this is the close. Entry here off of the open, right in there. This is why I say I don't like putting stops 2 ticks above swing highs. I like going up a lot higher. Never challenged if you are trading with loose stops and another chance for re-entry, and then your runner goes down all day long. And you had so many chances using the CenterLine method for re-entries on this. I mean, literally all day long. But the mechanics are the same, no matter what market you're looking at. Mechanics are the same. Just blow it up, rally into a bearish trend, red down, you let it close, you get into this cluster. Oh, it comes back, your stop, wherever you want to put it. If you want to go 2 ticks above, that's up to you. I mean, that's your trade plan. Don't let me ever tell you how you should develop your trade plan. But I'm telling you, you're at risk of being swept if you're 2 ticks above swing highs. I prefer being very loose, trying to get the trade play out. And typically, the looser I get, it gives me re-entry opportunities because that's how I like to trade. And I can hear some of you now, yeah, but I'm told I should never average into losers. Yeah, I can tell you that's been um, that's been the one thing that has turned my trading around in the last 40 years was trading loose, having the idea that we're within the right framework and adding into uh, positions at better prices and averaging my costs down. So, but you get in here, a little bit of heat, not much. Another re-entry right in here, down she goes. I mean, you're at 1 to 1 right off the bat, within like 7 or 8 minutes. And then your runner, depending on how you treat that, I mean, that thing had a bobsled ride all day long. I mean, you never ever buckled. This never came back above the entire day until 5 minutes before the market closed. So, time frames. Again, it's up to you on intraday time frames. You may not like tick charts. Let's go back to the ES and let's just go with a 1 minute. Now, you'll notice here, why does that higher time frame look like that? Because it's still set on ticks. So we have to go back in. What am I doing? I have to go back in and adjust this. We want to show higher time frames, but we're going to go with 5 minute. And we'll probably go with a two. I much prefer a 2 minute or a 3 minute if I'm doing time charts. So let's just take a look at the S&P. Now you see why I really prefer intraday tick charts. They're just cleaner and they give you better entry opportunities. But on a 2 minute chart, here's your first entry. We get the cross, pull back, washing back, solid green up. You're in on this one here. You've got to stop way back here, entered there, 1 to 1 is somewhere up in this area. And then your runner still has some juice. But you really have to have your trade plan dialed in on exits on time-based charts because they're not as forgiving as tick-based. But the concept is the same. It doesn't change. Here's an entry, beautiful entry, green, the first green pullback, red, you're here, and you get paid immediately. Green, red, entered, paid. What's your 1 to 1? Probably don't get 1 to 1 there. You probably get close to, you may get out of the break even, depending on what your trade plan says. But you see now why I prefer intraday trading on the tick charts. Day trading or swing trading, yeah, I'm on the daily, the 4 hour, and the 1 hour charts. That's what rules there. And it's the very same concept, no difference at all. So there's the time-based. Let's look at a tick, time-based for gold. Let's do a 2 minute there. We'll do a 2.5 on gold. So this down moving gold, first pullback, green bars, first red, in on the second. Your stop's up here, and you definitely get a 1 to 1 on that move down there. Here is another great entry. I really prefer what I look for in these entries is I look in on downtrend. When the pullbacks occur, I really prefer to enter the pullback as long as the current center line remains bearish in this overall bearish trend. That's where I like to put the trade on. when these pull back and the center line changes, I'm a little more susceptible or skeptical. But I mean, you see here that worked. You can see this one worked. But this is where I really prefer to engage on the center line is in a bearish move when the center line remains red. We get the green, we get the red down. I get in on this one and try to hold for the juice. We get a down move. I'll be watching this after we close out the session here. But if we get a down move in crude, I'll try to get a position on in crude to hold overnight in micro crude futures. Okay. There's not much else I can show you on the center line. It's very simple, very elegant. For me, it's definitely withstood the test of time. I still use it every day. Everything I do, I'm looking at the higher low, lower high concept is just very, very forefront in the way I look at the markets. And the center line helps to frame that better for you. It gives you a framework to operate in and gives you some markers. And our indicator is really neat. Richard built some really cool stuff into this. I didn't show everything inside the indicator. These are the most important things. One of the things we've noticed is that the first probe of this higher time frame is usually a really good engagement point. There's a lot of times where when I see this in the handful of markets I'm watching intraday, I'll just take a position there, just a flyer. You're really close to your risk point at this stage. So if it rolls over from here, you've got very, very little risk. But if it's one of those 3 or 4 times out of 10 where this is the bottom, I mean, you're talking about risk to reward ratios off the chart for things like this. So it's worth me taking a shot on some of these little probes of the higher time frame, the first probe. And if I lose 6 or 7 of those and have a really small loss, all I need to do is hit one out of about every 8 because, like I said, the risk to reward on these are extreme and definitely pays dividends in the long run. The bottom line is what I want to end this is, you have to draw a line somewhere and figure out what you're going to trade to at least get your program off the ground. And I think, I've always said everything works if you put the work into it. You have to put the work into it. You're not going to put the center line up here and, like I always say, 2 weeks from now, submit a job, letter of resignation, and 5 weeks from now, I'll be making $10,000 a month trading. It doesn't work that way. You got to put in the time. You use the tools, become intimate with them, internalize them, so that you can just repeat the process every day. And I call it stacking nickels and dimes in my trade desk operations. And you can easily do that. I try to show everyone how taking small positions with, roughly 30% of your buying power, where you can target 5% a month return and hit that with precision. I mean, we're 3 weeks right now, and so far in January, my trade desk operations counts are up, almost 7%. And we don't even really have good markets right now. So just stacking nickels, dimes, taking little trades, using these techniques, but repeating them every day. All right. I don't have anything else. If you're new, if you've never seen me before, let me put Patreon. There's our Patreon address. Here's my um, email. If you've got any charts or anything that you want to see, just drop me hit me up on the email and I will, oh, okay. Hey, thanks, Mike. And I'll get back with you and drop your stuff in. So, and then let's see, is there anything else I need to drop in here? You want to see some of our stuff on our website? That's our website. Mike, I like the 333 tick time frame. I always have. I used to trade it quite a bit, and it's what I tell everybody is tick charts are great. Um, what they let you do is they let you dial in your risk, your initial stop loss, like time charts. They won't let you do that, but you can dial in your risk using tick charts, and that's what I like most about them. Let me change this. Set this to tick. Let's move this to, let's see. Yeah. Yeah, it's the beauty of tick charts. And it depends on your level of risk. So this 333 may be too much risk for you on these trades. Once you see where the entries are, where you have to put your stops, if it is, you have to dial the tick size down a little bit. But it is the absolute beauty of tick charts. That's why I like them so much. And if you want to go for bigger runs, you have larger amounts of capital available where you can absorb the large initial stops. Then you can make the tick charts larger. But 333 is it's a good work for me. And you can see, just like I've said, first probe of that higher time frame, bam, that's money. Here's one here, first probe, and whether or not, depending on where you put your stop, I don't know if you would have survived that, but if I'm up here, my stop is probably above this, way above this. But yeah, that's the thing about tick charts. So let's see, anything else? Oh, hey, Mike. Yeah, it's we have people from all over the world in the room. Yeah, I mean, they're literally all over the room. So, all over the world and all over the room. The room's almost open 24 hours a day. I mean, Richard, our NT8 programmer, he resides in Australia. We got people in Switzerland, Europe, other places. So, but anyway, this concludes the webinar. Hey, thanks for joining in. Drop me a line if you need if you have any questions or you want to see any charts, and be happy to help you out. Good luck in your trading, and we'll see you at the next webinar.